Well, good morning, everyone. It's Tuesday. It's the 10th of December, and New Year's is right around the corner. We've got two major fundamental factors to talk about. The first one is productivity and cost. Expectations were negative 0.1. The number came out at negative 0.2. Worse than expected. Not only that, this is the worst or the most negative number since 2015, 3.5 to 4 years ago. So, productivity and cost is declining. But in light of the fact that GDP was slightly better than expected or in line with expectations, I don't think it's a major issue if things stay around this area. If they get worse, it could be a potential problem. Now, we got bigger fish to fry. This Sunday, it's not good. This Sunday, if we don't have an agreement in place, a tariff agreement, U.S. Washington slaps $160 billion on China's goods and products. It's not going to get pretty, and the market is going to come off if that happens. Right now, no news is not good news. It's bad news. The market's actually taking it negatively. Technically, I want you to take a look at this. This is the gap that happened over the past few sessions when we had the really positive Friday's economic report. We had employment data that was just completely off the charts. I guess I can't find it right now, but we had an amazing unemployment data. The expectations were like 180,000. The number came in at over 200,000. The numbers were really good. As a matter of fact, unemployment's near 50-year low right now, or beyond a 50-year low. But technically, I've been telling you that the market's coming off overbought territory, and it looks to me like we're filling this gap. And if this gap fills, the odds are strong we're going to go down to the 307 level. As I mentioned earlier this week, I believe it was Sunday or Friday even, that I believe the market's going to congest because we've got GDP data coming tomorrow. This is going to be the big report, and typically, even though I'm not expecting the Fed to tell us there's not going to be a lot of new information. This Fed has a propensity to like to talk a lot and to give us really long-term projections. And when the Fed does that, it cools off the markets. Because the markets don't have anything to anticipate. So, not expecting a lot unless the Fed tells us something really off the charts, and I'm not seeing that at all. This is not Greenspan. That was just a joke. We used to joke around whether he was dead or alive as he was doing his speeches. So didn't have a lot of emotions, which was actually good for a Fed because they're supposed to have a really good poker face. And Jerome Powell does not have a poker face. He likes to give predictions 9 months ahead of time, which is not really great for the market in terms of surprise factor. But nonetheless, the S&P looks like it's cooling off. It looks like we're going to be choppy just as I anticipated. And the Russell, which has more impact from China, is doing the same. I still believe the Russell is going to break out, so we may not see the Russell fall below the 161 level, which is the short-term support. Actually, a better area would be right here, probably right around here, the 159, 161 level. But the bottom line is this. If we don't resolve our trade differences by Sunday, or if China and U.S. don't kick it further like they've been doing, we're going to see a nice big fat downside all the way down to the 157 area. There's very little doubt about that because there's frankly no catalyst right now. And the market is rallying or was rallying on the hopes that the trade differences will be resolved. But again, if we don't hear anything, and right now no news is being interpreted as bad news. I guess technical analysts and fundamental analysts want to see something beforehand. And usually it's not happening. Usually no news is good news, but in this case, Wall Street is getting more nervous by the day because today's the 10th and we only have till the 15th. So the night is not young anymore. And again, the Russell doesn't have a lot of volatility, doesn't have a lot of range. And quite honestly, right now, all the traders that bought around these levels are going to start getting really, really nervous. Now, volatility should still remain fairly high, and I would expect volatility to remain high, or at least fairly high, till next week, till we see this resolution. If we resolve our trade differences, volatility will move towards 11, 12, If we don't, and I don't think we will, I think we're going to see a nice spike to 20. If you look at volatility, notice every time something happens, we see a nice big spike and then it comes off, nice big spike and then it comes off. Volatility typically reverts to its medium-term range, and medium-term range is right around the averages. We're really low at 12. I told everyone who would listen to me to buy volatility, to buy the VIX options when we were around 12. A lot of my guys did in my boot camp, and they made a killing. And most of them are still in that position. I believe we're going to go up to 20 or lower because I believe we're not going to resolve anything with China, and we're going to see the S&P fall flat on its face back down to its support, which will be right at the 50-day average, which will be between 307 and 305. Don't expect a lot of upside, especially if we don't see something positive in the next few days, because this is it, and we've been postponing these trade talks forever and ever, just pushing them back. We've got till the 15th, folks. Then that's when the stage one of the agreement, the first stage of the agreement, is supposed to be reached, and the markets are not seeing it right now. Again, I would focus more on the Russell 2000 because the Russell 2000 has more of an impact than the SPY. Let me put it up here so you can see what I'm talking about. But overall, don't expect a huge bull run if we don't agree on anything. As a matter of fact, we're going to go right back down to the base. If we push things back, but there's some progress in the talks and Trump spins it in a really positive way, I think we're still going to still continue seeing upside from the Russell, because the Russell anticipates, small caps anticipate things that may happen a long time ahead of time. Whereas blue chips, they assimilate things that are right on the table. These stocks are a lot more speculative, which is why they assimilated a market high over a year ago, and they've been moving sideways and are only now starting to break out on the hopes that the trade war is resolved. If the trade war is not resolved, no soup for the small caps. We could see some upside due to more speculation, but again, that's not here nor there. But let me tell you something really, really cool. Check out this stock. I was talking about this yesterday. I gave an alert on this stock. I believe it was, let me see here, on December 3rd, right here. I believe this is the 3rd, right there. And the price was around $101. And let's see, 4 days later, 4 days later, the price reached, it reached 111. Now, let me tell you something cool. Not only did the price jump from 101 to 111 over the last 4 days, not 4 years, not 4 months, not 4 days, but if you made this trade, and this was one of our trades, not only was it one of our trades, I told you last, I think Thursday and Friday, that this was our strongest stock. So I bought it for one of our programs, our Momentum Factor program that buys 3 top stocks. And it holds stocks for 2 weeks, and I'm expecting more upside, but it's only been in this trade 4 or 5 days. I don't remember if we got in on the 3rd or if we called it on the 3rd, but we got in around 101, 102. And as you can see here, it went as high as 111.25. Now, let me tell you something really, really cool here. We didn't just give you alert on the stock. We also gave you alert on the option. And we alerted to the February 105 calls. And guess what? They are up right now since the 1st, since I alerted them. And I actually told you about this stock before my alert. I actually told you about the stock. If you look at Thursdays, Wednesdays, or Fridays video last week, you will see it. The option, the 105 February call, is up over 60%. At one point yesterday, because the stock closed near 108, but it went as high as 111, at one point yesterday, it was up about 70%. So again, options can give you opportunity to make between 8.5 and 13 times, between 9, let's say 9 and 13 times the kind of money you can make on a stock. We're still in this trade, and this is not the only stock we have. We've got 2 other stocks and a bond position. So if you guys want trades like this, follow the link below. Check out my program. It's called Momentum Factor. And I give you 3 new stocks just like this every 2 weeks, every 2 weeks, and we hold them, 3 stocks and 1 bond position, and we hold them. So if you want to get gains like this without looking at my free videos and hoping that I'm going to give you a freebie once in a while like I did for Cuervo, hope you got in on it either Thursday or Friday when it was right around here. It's up from 101, 102 to about 108, and went as high as 111 and change. And the option is up right now in 4 days, over 60%. Options, and folks, remember, we're only holding for 2 weeks. So the options never expire. We're always buying them and liquidating them. We're buying options where we know we're going to sell them in 2 weeks. So we can look at our option calculator and we could see the decay rate in that option. So we always choose options that will have minimum decay over the 2 weeks. So in this case, we picked the February 105 options. Think about this. We're in December right now. February, got a couple of months. So 2 weeks is barely going to put any damper on the expiration. So you can literally buy this option. You don't have to spend $100 or $108. You can buy the option for just a few dollars. I don't remember how much we paid for the option, but it was, you can look it up. It was the February 105 and it's up 60% right now. So let's take a look at the option chain. Let's just, well, actually, I'm not going to do that. I'll leave that up to you. But anyhow, we called it right here at 101, 102. It went as high as 111. It's at 108. The stock made about $7, $8. Whatnot. I don't have a calculator here. You'll have to do the math yourself. But the option was up over 70 or maybe even 80% at one point when we were near 111, and it closed 60%. Folks, can you imagine? Can you imagine waking up can you imagine in 4 days making over 60%, and there's zero chance of the option expiring? These options are bought and sold. We treat the options like a stock. The options are a proxy for the stock. So when we buy the stock, we buy the option. When we sell the stock, we sell the option, and we do it every 2 weeks. And again, we pick options that have very, very little risk of decaying. In this case, we're buying February options. They've got 2.5 months left. Options don't even experience major decay till 60 or 45 days till expiration. So we're not even in that zone. So if you want to get in on trades like that, follow the link below this video and check out Momentum Factor, where I give you 3 stocks like this every 2 weeks, twice a month. Talk to you guys soon. Have a great day. Follow the link below. Check out Momentum Factor and check out Qorvo. Hope I'm pronouncing it right. QRVO. Talk soon. Bye.